Wednesday's market closes were mostly lower, except for the hog markets. Kent Beadle with Paradigm Futures is joining us. In Kent, the grains all saw a sell-off. We saw new contract lows in corn and Kansas City and Minneapolis wheat, but some of this was just some concerns going into the USDA Ag Outlook Forum, right?
Yeah, I think it was. And we did make new lows for the move in soybeans as well, even though they weren't contract lows. But, to be fair, we are all looking ahead to the release of the new balance sheets for the 24-25 season, which will give us new acreage, projected yields, projected demand, and some carryouts that the trade believes, looking at average trade guesses, are going to result in significantly higher ending stocks in all three of our major commodities. And so we have a speculative side of our community that is holding a big short position, and they're just continuing to press on that, hoping that they get a bearish reaction maybe from another segment of the marketplace in the aftermath of the release of the report, so that maybe they can step in and buy some significant weakness in order to start to cover that massive short position they carry.
So funds stepped on the accelerator in the grains, and of course, new contract lows, as I mentioned, in the corn. Soybeans, we also took out some key support there, didn't we?
Yeah, we were looking at 1179 as being a support area that we'd made that low, I think, on Monday of the previous week, and held it through most of last week. Took that out overnight, and then we tried to bounce off of that level this morning, but ultimately we had a very weak looking close as soybean oil prices ended up cratering late, kind of following the energy markets, which turned lower later in the session as well.
Yeah, and I don't know, South American weather overall is favorable enough. It's not providing, any support at all to the soybean market right now, is it?
Not really. We're going to move back into a little drier time frame for Argentina. For those acres that didn't or may have missed out on the rain coverage recently, that could turn out to be a problem, but would be a localized problem, not a major problem. Moving north into Brazil, we still see declining conditions in the southern part of the country, in Paraná and parts of Mato Grosso do Sul, but in Mato Grosso and in Bahia, Tocantins, we've definitely helped the drought situation there. Rains actually are starting to decline again, which is going to allow for a more rapid harvest, and we've actually seen harvest progress estimates been clipping along at a pretty nice pace here as of late.
Corn market, where do you think we find the next support? Do we have to go down and take out $4 at this point?
Well, there are major old highs on the continuation chart right at 420, and once we took out the 442 area here recently, 420 has always been kind of the next objective, and probably makes a little sense that we would go test that area in conjunction with the release of the USDA outlook numbers. Obviously, if we get below 420, then you're looking at the $4 magic psychological support area.
Yeah. What about the wheat market? Okay, I mentioned new contract lows in Kansas City and Minneapolis wheat, but in addition to technical selling, we did have some Black Sea export news that kind of weighed on the market, didn't it?
Yeah, there was a news story this morning coming out of the UK. David Cameron made some comments, I believe, to Reuters specifically in an interview where he said that the Ukraine was on pace to fully export their exportable supply of grain upwards of 50 million metric tons if they continue to export at the pace they've been exporting at recently.
No doubt. And we saw red in the cattle market, and some lower cash trade contributed to that, but we were lower previous to that, weren't we?
Yeah, we were a little bit lower, and we've been on a correction after what's been I think 8 of the past 9 weeks we've been higher, really since the debacle and the expiration of the Dees contract and the insurance contracts that were a big story previously, and we've been going up, but with cheaper corn prices and higher cattle prices, it just makes sense that we would start to see some hedging, and that seemed to kick in this week, and ultimately we ended up with some lower cash trade this week at $180 in the Southern Plains.
Do you think we're due for a bigger correction in this market or not?
Yeah, actually, anytime that you seem to exhaust your buying and you start to move lower, you're going to get some profit taking from the recent longs, and you would expect maybe a 32% correction of this sort of rally. So I would maybe look for something back down into the 175, 176 area is a possibility, and then and then potentially after that, I just wouldn't be at all surprised we get into the summer if we didn't try to make some new highs again.
No doubt. It also looked like maybe we were getting some unwinding of cattle hog spreads, cattle on the short side, hogs on the long side. However, we also had news out of a testimony from Ag Secretary Tom Vilsack in front of a House hearing about the chaos that Prop 12 is going to cause in the industry. Did that contribute at all to the rally in hogs?
Yeah, Secretary Vilsack essentially said that he's looking for congressional action in order to essentially equalize laws across all of the states so that our industry doesn't have to try to produce hogs under one rule in one state and then for a different rule in a different state. That's the chaos he's referring to. And certainly I think he's correct. From the perspective of a hog producer, trying to be able to produce pork for everyone in the United States instead of just part of the United States makes an awful lot of sense.
Right, and there's been a lot of uncertainty in the industry as a result of that. We also have weekly exports out tomorrow. We've had a couple of really good weeks. Was the market maybe anticipating that as well?
Yeah, actually, we've continued good sales into Mexico. We've had a recent pickup in sales into China, which is kind of interesting because of all of this chatter that Chinese demand is somehow on the wane because of a poor economy. We were going through a secondary liquidation phase in Chinese hogs due to ASF, and it's very possible that they've worked through that inventory, and now all of a sudden they have less pigs, and we may need to start to we may start to see some bigger exports to China, and that obviously would be very good for this industry.
Thanks for joining us, Kent Beadle with Paradigm Futures. Remember, futures and options have substantial financial risk and are not suitable for all investors. That's Markets Now.